Welcome back to Crypto Intel, the channel where we break down the crypto market with clear analysis, real insights, and the latest developments shaping the future of digital finance. Something interesting may be building around HBAR. At first glance, the price action may not look very exciting. No massive pumps, no explosive moves, no constant hype. But sometimes, the most important changes in crypto markets happen quietly. And right now, there are early signs that a supply shift could be forming around HBAR. And if that's true, it raises an important question. Could a supply shock lead to a sudden price move? Today we're going to break everything down. We'll talk about what a supply shock means in crypto, how it forms, what signals investors look for, what's happening with Hedera right now, and whether HBAR could be entering a phase where price starts moving much faster. And if you enjoy crypto analysis, market insights, and deep dives into promising blockchain projects, make sure to subscribe to Crypto Intel and turn on notifications so you never miss our latest videos. Let's start with the concept itself. In simple terms, a supply shock happens when the available supply of an asset becomes limited while demand begins to increase. In crypto markets, this can happen when more tokens are being held rather than sold. For example, when investors move assets off exchanges into long-term wallets, those tokens become less available for trading. At the same time, if new buyers enter the market, they have to compete for a smaller available supply. And when demand meets limited supply, price can move quickly. This is one of the most powerful dynamics in any market. Now let's connect this idea to HBAR. Over time, many investors have started to look beyond short-term price action and focus on long-term positioning. This shift in behavior can reduce selling pressure. When fewer people are actively selling, the market becomes more stable. And when the market becomes more stable, it creates the conditions for accumulation. Now, this doesn't automatically mean a supply shock is happening, but it does suggest that the conditions for one may be forming. And in crypto, conditions often come before confirmation. Let's take this a step further. Why would investors hold HBAR long-term instead of trading it? To answer that, we need to look at the fundamentals behind Hedera. Hedera is not just another altcoin chasing trends. It is a project focused on building infrastructure for real-world applications. The network runs on Hashgraph, a technology designed for speed, efficiency, and scalability. Compared to many traditional blockchains, Hedera offers high transaction throughput, low fees, fast finality. These features make it suitable for large-scale applications, including enterprise solutions. And this is where the long-term potential comes into play. If more applications are built on Hedera and more activity happens on the network, the demand for HBAR could increase, because HBAR is used to power transactions and support the network. Now let's talk about another important factor: market psychology. In crypto, most investors react to price. They buy when price is going up, and they lose interest when price is moving sideways. But this behavior often creates opportunities, because while retail investors are waiting for confirmation, more experienced investors may already be positioning. This is how many large moves begin, not with hype, but with quiet positioning. Now, if we combine this with the idea of supply reduction, we get a powerful setup: less supply, gradually increasing demand, improving fundamentals. These are the kinds of conditions that can eventually lead to strong price movements. However, timing is always uncertain. Markets don't move on a schedule, and even strong setups can take time to develop. Now let's consider the broader market. HBAR does not exist in isolation. Its performance depends on overall crypto market conditions. If Bitcoin and major altcoins enter a bullish phase, capital flows into the market and risk appetite increases. In those conditions, altcoins with strong fundamentals often benefit the most. But if the market remains uncertain, price movements can stay limited. This is why context is so important. Now let's talk about the risks. HBAR is competing with major networks like Ethereum, Solana, Avalanche, and others. Each of these ecosystems is actively growing and attracting developers. There is no guarantee that Hedera will dominate this space. Adoption takes time, competition is intense, and market sentiment can shift quickly. But in my opinion, HBAR remains one of the more interesting long-term projects in the infrastructure category. It combines strong technology, a unique governance model, and a focus on real-world use cases. And if the conditions for a supply shift continue to develop, the project could become more interesting from a market perspective. So the real question becomes, is HBAR entering a phase where supply is tightening before demand increases? We don't have a definitive answer, but we do have signals, patterns, and conditions that suggest it's worth paying attention. Because in crypto, the biggest moves often happen when the majority is not expecting them. For now, HBAR remains relatively quiet, but if a supply shock begins to form, that could change faster than most people realize. Let me know what you think in the comments. Do you believe HBAR could experience a supply shock, or do you think the market needs more time? And if you enjoyed this breakdown and want more crypto analysis, market insights, and deep dives into promising blockchain projects, don't forget to subscribe to Crypto Intel. Thanks for watching, and I'll see you in the next video.